You should carefully consider whether trading is suitable for you in light of your circumstances, knowledge, and financial resources. You may lose all or more of your initial investment. Opinions, market data, and recommendations are subject to change at any time. Past performance is not necessarily indicative of future results. This is training. This is something you will research and make sure that it fits you. So please take notes. So our next person in the wings is Toni Hansen of Trading from Main Street. She's going to talk to us about avoiding traps. And that has been a really big theme for this event, was how you can be a better trader by not doing some things. So Toni, thank you so much for being here. Let me see if I can find you. Let me see.
Yeah, do you hear me?
There you are. I see you now. All right, I'm going to make you the presenter. And then you do like to see the questions on the fly, I do believe.
I do, yes.
All right, so it's going to knock your microphone out for about 3 seconds, but I can make it happen. So here, get ready, get set, go. 1, 2, 3, 4, 5. Maybe it's 5 seconds. Now you're back. All right. Hey, Toni, do
Yeah.
you know what your absolute worst trade was?
Oh my gosh.
Just
I don't,
one, not
I,
all of them. I know. Everybody's saying, gee, that's hard because I've had a lot of them. I guess that's part of getting to be an expert.
yeah, I think it's not that it was exactly like one trade that sticks out, but one problem that I had that took a long time to get over is I would get stuck thinking, hey, this is the way I feel that the market is going to go. And I might think I'm a little too early and get stopped out and keep trying it again and not paying attention to the larger time frame shifts that have changed where I really should have changed my bias. And that was a hard one to get over because you get like these patterns and you're like, okay, well, I think the market's going to do this and I want to keep trying. And even though I don't have what would be the entry on my strategy, I want to try it anyway.
Oh
So
my.
yeah,
Yeah.
so waiting for the entry, not chasing, waiting if I miss something, just being okay with the fact that I missed it.
Yeah.
And that was really a big thing.
Okay. All right. Well, let me just do your intro and then I'll mute myself and you'll take it away. How about that?
All right, sounds good.
All right. Toni Hansen is one of the most respected technical analysts and traders in the industry with a high reputation for accuracy in both bull and bear markets. And you just heard how she learned the hard way to figure that out. She began her trading career as an equity swing trader in the mid 90s and has since expanded into many other sectors of the market. Her style of trading and market analysis transcends both time as well as market vehicles, making it attractive to investors and traders of stocks, futures, options, ETFs, commodities, and Forex. So this is very good information to cover a lot of specialties. That's awesome, Toni. So I'm going to mute myself. You take it away.
All right. Well, thank you for having me here, you guys, and I hope I help you on your next on your path in your trading. I came into trading without having a mentor. I didn't have more than rudimentary knowledge of the markets. In fact, I had no intention of actually becoming a trader. I just sort of fell into it. And there wasn't a lot as far as education went for online trading back when I started because I began back in the mid 1990s, and so I've been doing this for about 25 years, a little bit more, and I didn't have like a core strategy. I didn't know how to differentiate between the trends that were going to continue easily versus those where I was more likely to just get trapped. I knew basic things like, hey, buy a 5-day pullback into a 20 period moving average, right? Well, over time, that's not actually going to work. And in fact, if you go even today if you go and you open up any sort of browser you want to, put in like what would be a common strategy, like a head and shoulders pattern. And if you go and try to trade it according to the rules that are laid out, you're going to be in big trouble because sure, you can find lots of examples of them that work according to the guidelines that are given, but you're also going to find substantially more that do not. And that was something that always bugged me about education in the markets. And it's something that I see a lot of even today, where I will go and I'll watch somebody's class or, read somebody's lesson. I'll be like, that doesn't actually work like that in real life. And so my goal was, I started basically teaching what I knew from the very beginning when I started trading, and writing what didn't work as well as what was working for me. I had no intention of becoming an educator in the markets. I was just doing what was the equivalent of an online blog back in the day. And it caught the attention of actual, professional traders. And before I knew it, I was teaching market analysis for the CME group, and Board of Trade back in the day, NASDAQ, even Investors Business Daily. So got into the market unintentionally, but by sharing everything I was learning and listening to the questions of other traders, it develops this growth mindset. I always had that growth mindset where I always wanted to learn more. I wanted to figure things out. I was the kid that took apart computers back when there were first personal computers, and would rebuild them. And I wanted to know how things worked and what made things work and what made things not work. And I treated trading and market analysis the same way. So what I want to share with you is the system of market analysis that I've developed over the last couple of decades, where we are going to look at strategies that look like, some of the basic core strategies, but we're going to break them down, and we're going to look at the individual components that make up these strategies. So I call these the building blocks of price development. And it is a system that I started developing in the 1990s. And over the years, it has just become even better. So at this point, there's a lot of advanced rules and things that I look at when I'm trading. But the nice thing about this system is that you can start with the basics and have a really good core understanding of pattern analysis to begin with, just because people like me and my traders have put in the work to get to this level. So I want to share with you, some of the shortcuts of things that I look for. And in today's class, we're going to be talking about avoiding market reversal traps. And I only use one particular type of indicator these days, and it's more something where I view it as a bit of a crutch for traders, because the more you get used to it, you're not going to actually need to draw them on your charts. But for newer traders, they work incredibly well. So a problem that traders run into when they're using indicators is not knowing when to not use them, not knowing how to make adjustments. A lot of times you'll come in and you'll see something like a Fibonacci fan, right? And people will say, hey, you just draw the fan from the low to the high of a trend move. That doesn't work. If you're just doing that, that's not going to give you good fan support. There's going to be rules that you need to be able to follow in order to add your fans properly and know when to make adjustments. But it's a good starting point. So it's like when you're learning a new language for the first time, and or learning to read for the first time, you're going to start learning things like phonics and things like that. But then you're going to start to learn exceptions to the rules. And that's what trading is like as well. So my goal is always to figure out, hey, if something's not working, I'm not going to just accept the fact that 20% of the time it just doesn't work. I want to know under what circumstances the odds are higher that it won't work. What is happening even as it's following through that showing it's not going to get to the target levels that I'm expecting. So really developing rules is something that I put a lot of focus on, because when you have rules in trading, it's going to help you develop your confidence in trading. And it's not going to be feeling like, oh, hey, I feel this is going to go up, and then you keep trying to buy it like we were talking about, feeling like something's going to do something, but then not really having the rules to actually manage it. And that's a big thing when it comes to trading. So I'm going to share with you a very strong strategy here, and we're going to look at how those rules will make it so that you're going to avoid a lot of the traps that happen. And you're going to walk away from this class with a strategy that has been tested for dozens of years here and has proved reliable in any market and any time frame that you want to trade. I started out as a stock trader. I now primarily do futures, but I've traded pretty much everything in between. I will say that I've always stayed away from cryptos for the same reason that I stayed away from Forex when it first came out. When you're dealing with unregulated markets, you have a very substantial level of risk. And that's something that we've seen playing out here over the last year or so, in particular with cryptos. It's not that technical analysis does not work as well with cryptos, but when you have things such as your brokers imploding and not being able to pull your money out, that's a huge problem. And Forex was the same way for many years. You would have um, they'd be trading basically on their own, and you wouldn't have good consistency between where your bids and your offers were with different platforms, basically. And it led to a lot of trouble. And eventually we started to see it become more regulated, become more safe, really. And that's what I think we're going to end up seeing here with cryptos as well. But it has to get past these growing pains that they're in right now. So at some point, I'll probably add cryptos, but this is not quite the time yet. So if you follow me on social media, you'll see sometimes a lot of people will like ghost my accounts and copy them and try to sell you cryptos and things like that. That's definitely not going to be me, you guys. So the strategy that I want to share with you, this is a Phoenix strategy, and this is the very beginning continuation pattern in new trends. The opposite of this pattern is one that I call an avalanche, and it's actually what flipped the market around on the Dow here this morning. So it had a beautiful example of an avalanche this morning that I'll pull up here in a little bit to show you. Haven't traded any Phoenixes today. I did yesterday, but that avalanche is just going to be the exact opposite of what our Phoenix was. So I'm going to come back to that here in a little bit. That was the chart for it. So with a Phoenix, what we're looking at is a core downtrend move where we're starting to get a break in that trading channel. So we want to see something ideally breaking out of the channel. Now there's going to be a lot of versions or different variations of the Phoenix, but we're going to start with the textbook one. And from there, you'll start to develop an understanding of different variations as well that can happen. So what we want to see for this upside move is an average 2-wave upside move, where each wave is about the same size. You don't want a really extreme momentum move on the upside, because that will have a much harder time offering a continuation that's going to be as reliable. So we want that kind of average, slightly slower than average, slightly stronger than average momentum. And that would ideally mean, compared to our downside, something that has about the same momentum on the upside. Then what we want is a 2-wave correction. Now, this 2-wave correction should take about twice as long as the original 2-wave upside move. Again, this is the core Phoenix here, is what we're looking at. And what we want to see within this is this shift in momentum that is happening. And there's a lot of different traits within this Phoenix that are going to help us determine, hey, is this going to be a really strong breakout, or is this something that is going to be a trap? So what I want to teach you today is how to avoid those traps on the breakouts, how to know when something has the highest probability of being a real true breakout that is going to lead to a very strong impulse move. So a lot of traders that are looking at breakout strategies, they might get into something too early, they get into something too late, they don't have adequate development of price in action inside of that range, and they end up with traps where it might go to a slightly higher high. Before they know it, it's flushed under their previous low, which is where most traders would put their stops. And lo and behold, it could easily go and flip back around again, but have less confidence that it's going to be able to continue because they already got stopped out of it by taking it too early. So this slide here is just showing you some of the basic characteristics. So you can do a screenshot of this. This is what our core Phoenix is going to look like. A couple of things you'll notice on here. If we look at the second chart over here, and you look at your distance between the first pivot and the second pivot high, and then where this is trying to break out, you want orange A and orange B to be about that same amount of time development. That time development can be on a tick chart or it can be on a time frame chart. So it might be a 200 tick chart or it could be a 30-second chart. If we look at our Dow here, for example, this is the avalanche. This is the opposite of that Phoenix. And if we look at that distance there, go back to grab my pen. Here to here, where it's breaking down, look at how those are about the same size. This is very, very close to our textbook move over here. A difference in this is we actually have a pattern. It's called a momentum reversal into an avalanche. And so there's a little bit of a difference. It doesn't quite have the full two-wave move down here. So in a typical one, we would have the two waves. We call this a stunted avalanche because it doesn't have those two waves to begin with. But you'll also notice when it comes over here, if you look at the distance between these two lows and into that third low, we divide these in half. Look at where this second high is happening. So compared to the second low in here, this will often have a two-wave move in here, two-wave here, two-wave here. So a lot of times those are broken down into two waves. This pivot here, if we're going through and looking at those halfway points, we want this pivot to be ideally in that latter 40% or so of the difference between those highs. And when that happens, that has the highest probability of giving us a really strong breakout coming from that range. So this is something that you can easily quantify when you are looking at breakout strategies. Are we always going to see everything that looks beautiful and textbook? Of course not. So what we want to do is we want to look for the setups that have the highest probability and can allow you to build confidence in that strategy. And over time, you're going to start to learn the little variations where it becomes more advanced. But the avalanche here on the Dow this morning is pretty close to textbook. The main difference is just that it is stunted. It doesn't have the two-wave movement before it goes into our two-wave correction. But if you look at this correction, you've got two waves with each of those portions, which is also something that we will see in those Phoenix setups as well. Now, the entry trigger that I use on these is if we look at that second correction, I want to use a break of that trading channel. So on our Dow this morning, the trigger that I used was right here. And this is the micro. I use the Dow to trade, but I've got the micro chart open on this computer. So that's where the trigger point is. Now, there's a lot of other things that can also help you improve your timing and improve your probability of success. One of them is that in each of these corrections, you get a decline in volume. So here we have that initial decline in volume, and then over here we have that secondary decline in volume, where you have really light volume right before it's breaking out of that trading range. A lot of traders get concerned about this. They want to wait to see volume picking up so that it's actually confirming the trade. The problem with that is that you've missed your best opportunities when you're waiting for that. Another thing I see a lot with traders looking for breakouts is they will go and take a line between those lows and use that as their entry point. I'm not usually going to do that. I might use it to add and build into a position, but that's not usually where I enter this trade. I want to enter it before we're starting to see everyone jump in, because I want to have a stop that is very, very tight. And for me, what I'm going to be looking at is I'm going to take that low and I'm going to extend it, hook it up to the low here, and my stop is going to move along with me as that is moving higher. So this is how I would adjust my original stop. So what happens is very quickly I will get into a level where I'm not going to be in a losing position, even if it does go and flip around on me. Now, the basic target on a Phoenix is to look for a measured move. So on this initial breakout here, we want to make sure that gets to about 61.8% price extension compared to over here, because that's going to allow it to get to the 100% extension. If it stalls at 50%, it's going to have a harder time getting to 100%. If it blasts through 50% and 61.8% extension, then it can go further than that measured move. And a lot of times when I'm looking at a Phoenix, I'm looking for something that's going to be a major trend reversal, not just that initial bounce coming out of a trend, but something that is going to lead up to a much stronger, larger time frame trend development. Let me clear this and we'll go on to that next slide here. So here's an example from the Dow earlier this year. And the reason I'm showing you this one is because we have so many of them that have triggered recently that look almost exactly the same as this. And this is a strategy that has really proven itself over the years. I started teaching it in the late 1990s. And if anything, it just has become better because my understanding of how to use the pros and cons and the circumstances in which it's going to have a harder time has just improved over the years as well. In this particular one, we're looking at a little bit of a version of an inverse head and shoulders too. So we've got that zone where we've got the stronger two-wave trend move on the downside, and then we're starting to see a change in our trading channel. So in an inverse head and shoulders, you would have a shoulder over here, and then you would go to that lower low, and then you would have a right shoulder over here. This is one of my favorite versions of a reversal, and it's also the same type of thing that was happening on the Dow this morning. So every time I see this where we get that shift in the momentum here, and then we get the avalanche or the phoenix, I want to take that setup because the probability of success on it is substantial. It's very rare that I end up stopped out on that particular strategy where you're combining the phoenix or the avalanche with an additional shift in momentum. So in particular, what we would like to see is that where that momentum shift starts and goes into the low, if we do 100% extension, that's going to give us a really good do or die zone to get a nice strong Phoenix breakout coming out of it. So in this one, you'll notice that it breaks that trading channel, pops up, and then goes into that zone of congestion. If we're looking at our distancing between the highs, we have a little bit of a double high here, but those distances between those when they go and break are very, very comparable. Your last pivot low in here is after what would be your 50% extension. So you're putting it in that last 40% or so before the breakout. Stop level would be just moving up along here. So very quickly, you're going to get into levels where you're not going to be at risk on a stop. Now this one gets off to a little bit of a slower start here. It's a little bit of a choppier start, and that's just because the momentum over here was so extreme. So that does add a little bit of a risk on this type of Phoenix because it could shift and continue with a bear flag. So that's where your trend development over here is really important. You want to make sure you have very strong support here and ideally trend exhaustion happening over here on the larger time frame. And that can allow these slower starts to then go and be able to gain momentum. But if this is just coming down for the first time and breaking an uptrend here, then you got a greater risk that this could just do basically a chevron and end up breaking to the downside. So your Phoenix can still give you some gains, but you would want to get tighter with your risk management because it could break down more quickly. And that's where developing a greater understanding of the patterns comes into play, really paying attention to where your trend placement in it is as well, and not just what's going on that smaller time frame. So here's another one with the same thing. Really strong start, breaks the channel. You get that nice pullback, similar development between those highs. Here's the bigger time frame for the one earlier, or one of them earlier. And again, a little bit of a slower move to start with before it gains the momentum. And that's just because it has that extreme start to it. But on the larger time frame here, on this one on the Dow, you've got that measured move development on the downside that also helps you with this reversal. So one of the tools I want to share with you here today that's going to help improve your timing on this as well. We've already looked at the time development when you're looking at the distancing between those highs and where your pivot lows are happening. But another tool that you can use is going to be your Fibonacci fan. And this is something where once you get used to using them, you're going to have a good idea of where they're going to fall anyways. But it is a beautiful kind of crutch for newer traders that are learning this particular strategy. So what we want to do here with Fibonacci is we want to look at a couple of things. So remember, when that momentum shifts, if you're looking at that 100% time extension, that is one zone where you can get that nice strong Phoenix coming out of. We've got that volume decline here, really beautiful volume decline. We don't have a two-wave correction up here though. We end up with what is an inverse head and shoulders. So you want to divide that right in the middle of where that head would be. And that's where you want to look at your time development. So A and B. This is that same thing that we're looking at. We're just having to divide it a little bit differently. So if you end up with a Phoenix that is forming an inverse head and shoulders, divide it right in the middle of here. And then you want this side and this side to be the same size. So this is just a different variation of it. But what you'll notice too is that when you get comparable correction again, that can offer a secondary entry to continue to build into the trades as well. And again, nice volume decline here too. This is what we call a checkmark continuation. It's just a type of bull flag, but you can find it in a Phoenix as well. Let me go move this on. Here is where when we add that fib fan. So this is the same trade. We're looking at that 15-second chart here. And when we go from this low to this high here, you'll notice there's a decent amount of chop in here. So we can attach our fib fan low to the high here of this impulse move. If this was really strong here, you wouldn't want to use a fib fan at that level from the low to the high. We have other ways that we would adjust the fib fan, but this is your textbook way of doing it. And what we want to look for is a pullback into that 76.4% fan zone. So I don't have the numbers on here, but this is 76.4, 61.8, 50%, 38.2. So what we want to see is a move into that 76.4, again, nice volume drop here. And as that last part of the channel breaks, that's going to give us the entry trigger on it. And that fan continues to serve as support. In an ideal situation, this won't quite hit the fan the second time around, and we would want to see what we would call a no touchy. And that would allow this to just take off. But it also gives us a good visualization where if we're trying to get more out of a trade, what's a maximum we could use as a trailing stop as well. Now on our charts, I want to show you what this would look like. So here we've got that nice upside move. Going to go from our lows to our high zone here. And what you'll notice is that we've got that kind of two-wave correction, but it's not as perfect as what we saw on the template. You end up with these kind of two highs here in the middle. So again, with something like that, we want to divide it. So if you're drawing your trend line and connecting these highs, and you end up with two that are kind of closer together, for our time development, we want to take the first high to the middle high and extend that. And that's going to give us our A and B comparison. Now, in our fib fan, what we want to look at is as it comes into that 76.4% zone, if you're holding that zone, when that breaks higher, that is going to trigger our entry on the strategy. Now, in this one, I would actually use a slight adjustment. I'm not going to go into the more advanced fib fan usages too much today, but when this is pulling back 50% and it's holding in that initial one-to-one zone, I'm going to make a slight adjustment there where I will pull the fan down to hook it up with that exact pivot low. But for basic purposes here, just to get a really good idea of how to start using your fib fans, this move up has a decent amount of overlap and chop here in the middle, even though you've got some smaller impulse moves. So this is one where going from that low to the high is going to have a really good zone of support. Now, as that pulls up, those additional levels for fib fans are going to start to serve as resistance levels too. So those are zones that you can start watching for taking partials off, taking your gains off, just depending upon how aggressive you're going to be and what those larger time frames look like. Notice you've also got that really, really low volume here. This is exactly what you want to see as it's coming into that fib fan. You want that really low volume. And so when that channel breaks, that's going to be your entry trigger. But notice it takes a little bit of time before you really see the volume picking up as easily. So the fact that it has that slower volume to start with, that's going to give you a really high probability trade. And now since this low here is just a little under that fib fan, what I would do here on this one is I would take my fan slightly and just hook it up with that low right there. And that way, as I'm doing my stop levels, as it's coming up, I'm just going to keep trailing that stop under that zone there. And that's what we would want to see holding in order to get another continuation here. So you would basically be looking at an ideal continuation zone right about here, so that if you're looking at your break here and here, this would give you a tilted continuation move. And we'll slide this over and see what happens there, but that's what I would be looking at for a possibility to get that trend to go even further. And what you can see here is, in this case, it just pulls back too hard, but that fib fan then ends up serving as a resistance zone. So ideally on your continuation, what you're going to get is you're going to get something that's very similar to what we saw on that previous slide, where it has that slower overall correction. Here, it kind of shifts. You're starting to get more of a change in momentum that did favor that breakdown. But if you were in this and you're trying to get more out of it and you're continuing to trail your stop there, even as that breaks, you're not going to take a loss on the rest of that position. So that's where that can serve as kind of like that ultimate do or die spot for you on a trade. My guess is there's something going on the larger time frame where the trend placement was not as good on this one. Let's go over here. So if you have Ninja Trader doesn't have fib fans built in. You have to do an add-on. So I did develop one that you can go and add into your charts. And it's just $79 and you get all of those fib tools that I use for those of you that do trade on Ninja Trader. So it's just tonyhansen.com/trade tracker. And that's a lifetime usage. So here we're moving forward. So this is showing us the more recent trades that I've taken using this. And you'll notice it looks very similar to the chart that we were just looking at here on the Dow from earlier. I'm going to squish this up so we can see that a little bit better. So the beautiful thing about this strategy is that it does continue to play out over and over and over again. So again, there's a decent amount of overlap in here, which means that I can go and take my fan level from that low to high and then use that correction here to serve as my support. And just like over here, it gets a little bit choppier, but we still have that clean midway zone here. So you want this low over here to be in that last 40%. So it's going to be the 61.8% time extension or past that. And ideally low volume. This has a little bit of a difficulty in really dropping volume here just because of the time of the day. So we're starting to see more and more traders coming into the market here, since this is after hours trading. And so this is a time where volume usually picks up anyways. You'll see that heading into the close. You'll see that usually heading into like 3 a.m. too. So if volume is declining into a time where normally it's picking up, or if it's just going flat in a time where you would normally expect volume to pick up, that's the equivalent of a decline. So we would see that heading into the end of the trading day as well. So this is your 100% time extension zone right there. You're coming right off, again, that fib fan. Now, in this case, I wasn't looking at that pure second channel as my entry trigger because I have a smaller Phoenix here on a smaller time frame. So that's what I ended up using as my trigger point. Typical target level is 100%. But if your momentum is picking up so that you've got stronger momentum than over here, you can usually get to 123.6 or even further for a larger target. So here is another one that I had. Again, a recent trade. And you've got that two-wave correction coming into play. So if we're looking at our distancing between our high zones here, what you'll notice is that this is really where that spacing is more ideally, but it pulled back more than 50%, which makes it harder to go through highs, and it also makes it more likely you might end up getting an inverse head and shoulders happening instead. So what I was looking at was for that possibility to develop here, and it ended up doing that second test of the fib fan support, and so that's what I used as the entry trigger on this one. I didn't use an earlier trigger because this move was bigger on the downside over here, even though it was coming into my fib fans perfectly, but the momentum was stronger. So I wanted to see something that might retest that support level to give me a stronger continuation. We've also got that spacing here for the bigger inverse head and shoulders. So dividing the distance between those highs and then looking here to here. That's going to give me that ideal entry zone on this one. So I've got multiple time frames that we're setting up at the same time. I've got that nice volume drop throughout the morning here as we're heading into noon, and then the trigger. Now, really strong move to start with, but it kind of started shifting a little bit here as it was heading into that 100%. Which is right into that previous high zone. So this becomes what we would use as a typical target level, that 100% extension level. A lot of times it does manage to go much further past that, but you'll notice that as our stop is moving higher here, it's easy to still manage to walk away from a trade that doesn't go as fast as you're expecting and still make gains on it. So your chances of getting a full stop are pretty slim. Happens maybe like 20% of the time when I do get something that doesn't go the way I expect it to, that I would end up with a full stop, meaning under that trading channel where I end up taking a loss at what that original stop zone would be. So not 20% of the trades, 20% of the times where it's not going to the target levels I'm expecting. More often than not, when a trade is not working out, I end up with a scratch, a minor gain, or a minor loss, which is why this strategy is really good for traders that are trying to build their confidence, because they're not going to have those massive losses most of the time, especially if you're following all of the rules that I'm laying out here. Do all of the setups give me those exact beautiful patterns? Of course not. But if you're focusing on the trades that do have those pros and you have patience to wait for those trades that all of those pros are lining up, you're going to have very strong success. You just have to be disciplined and wait for those particular triggers. So this just goes and details some of the smaller ways that I did trade management on here. So you can see that I did a number of, the blue ones are where I protect positions, greens where I add in. So these are just levels where I was building into the trade or managing it. Here's another example that we were talking about earlier, where when we add those Fibonacci fans, we can get those secondary and sometimes even third levels of where we can add into the positions. And some of the things to watch for when you're looking at the continuations, ideally, as this comes in a second time, it would not hit that fib fan level. It would come right above it. And if it comes right above it and stalls, you're more likely to get a movement that would go like this. So you'd have that stronger move. If it taps it, you've got to watch for the two-way movements coming off of that support, because that can go and then turn and flip it. If it comes in and hugs it, you're more likely to get a really strong drop. So this is how we can use that fib fan to help us out. And a lot of times that'll mean that I'll end up flipping positions too. So I might get out with the measured move up here, but also go and flip the position. Now, once this breaks, that fan level becomes a resistance level again. So on reversals, that becomes a really good level that you can look for a continuation on the downside as well. This is just another example with that same strategy here. This one is one that I did flip. So this is showing you where my executions were using the small inverse head and shoulders. Here's that smaller phoenix. Here's the bull flag. And you'll notice that if I connect those lows, you don't get it touching there. So that tells me I've got a better chance that it's going to go with stronger momentum. I ended up bailing on it because it should have gone with a 1, 2, 3 very quickly. So this pulling back a third or more, that tells me to get more aggressive. So there's a lot of rules that will tell me, hey, when do I hold on to the position? When do I get more aggressive managing the position? And then here's your avalanche, which looks very much like what we saw on the Dow this morning. So that later pivot high, that would give you your trigger for the breakdown. And this is what we call a T3 support level. Very, very strong support level here. Here's an example that shows us how we end up trapped in some of these. So if you're looking at a two-way correction and we're looking at our fib fans, what you'll notice is that we're not coming into that 76.4% yet. We also have a zone where when it's doing that pullback, it doesn't have that time development for the move either. In this case, you've got some lows over here that kind of shifted momentum. So ideally, the time development to get a trigger would be somewhere in here to get that as a trigger for the Phoenix. So even though you might get a two-wave correction in here, and it might give you an overall two-wave correction, you've got a much higher risk setup at that point. And it might look better on a smaller time frame or on the time frame charts versus the tick charts. But because it's only at that halfway zone, you've got a better chance that it's going to end up failing. And even if it does go, breaking this low first and then trying to go with more of a megaphone. So good example where, again, that fib fan serves as resistance once it breaks. So this tells you, hey, this is way too early, even though it's trying to break highs. And I see a lot of traders actually get trapped right up here because they're waiting for that whole channel break. But if you paid attention to the rules that I gave you throughout our class here today, you'd know that that does have a higher probability of getting a trap. And it's not the ideal entry zone. Here is that resistance. Here is another recent trade that I had just about a week or so ago here. And what you'll notice is that as this is breaking out, the momentum is not picking up. So this had kind of that slower start to it, slower pullback here. This is a Phoenix I call a chevron. And I took the correction in here as the entry trigger. I was looking at the time development between the lows. So we were still close to that zone for an inverse head and shoulders. I was viewing it as a little bit more of this megaphone formation here. But even though it popped good to start with, it couldn't get a continuation at the same time as that previous correction. So I wanted to see it going right here and coming and gaining momentum. And instead it came and it had those two waves of measured movement coming out of it with this shift in momentum. And this is the larger time frame. So this was trying to form what could have been a phoenix here, but it gapped down underneath it instead. So the larger time frame had a much more bearish pattern here. So I ended up exiting the position right into the measured move, and this is what it looked like with that fib fan, where we saw that end up breaking. If I recall correctly, it did pull back up into here and broke lower again too, the same way that we saw on that previous chart. So what we want to pay attention to in a lot of these is really that momentum coming out of it. Yep, here it is. So the momentum coming out of it as well. So this is one where I tried it again with the Phoenix down in here. We had that nice shift in the momentum also. So you've got that time development as well. Here is the exit that I took with the measured move. And then here's that new smaller trade. And you can see the light volume right before it triggers. And as it came up into those upper fib fans, that was also the resistance zone right here. I believe this pulled up a little bit more in here later, but this is a pretty high probability zone of holding. So it's a good place to post your exits on the book. Here's another chart. So a little bit of a messier Phoenix here. You got that nice volume dropping. We're coming right before the open though, so you're not getting as much of that extreme drop in the volume taking place. Two-wave measured move down, little bit of a shift in momentum here. So this was another trade that I took. There's a variation of the Phoenix. Again, using those fib fan levels as target zones to protect the position. So a lot of variations of this can take place, but you don't have to be perfect in order to get really good follow through on these. I love these trades just because if I end up with a stop, there's always a reason as I was going into the trade to know that the probability of a stop was higher. So I don't end up with those really big losses that you can end up with. So if you guys want to learn more about the Phoenix and the inverse trade, which is the avalanche, I have an on-demand course that is coming out this week. It's going to be released or next week. It's going to be released in segments. So you'll be able to study those videos over and over again. It's going to start from a very basic beginner level for the Phoenix and the avalanche. And then it's going to go into more of those advanced techniques on using it. Like, hey, where do I move my fib fans where I actually have specific rules for doing so? How do I adjust my target levels based upon the trend placement? And how do I adjust my stop levels as the trade is developing? So this course is basically everything you need to know in terms of trading the Phoenix and the avalanche, going from a very, very beginner basic level to a much more advanced level. It's going to have the templates. It's going to show you live trades that will be over the course of the next couple of weeks. I do a trading room once a day at noon, and we're often following these through in the live markets as well. So it's really great to see how, as things are following through, how does that change how we manage the trade? So this course is going to cover all of those. You can pick it up at tonihansen.com/Phoenix. And again, it's for everyone that's from a newer trader to a more advanced trader as well. So I'm going to open up the room here, see what kind of questions you guys have. And yeah, let me know.
All right, guys, now's the time to ask your questions. Toni just gave you a great presentation and a great offer. I'm going to put it up in the chat. It looks like I'm, let's see, www.tonihansen.com/PHOENIX. Nope.
AJNSEN.
How about that? Spelling does count when we're talking about URLs, right?
It does, yeah.
Okay. And that message, I wish there was a way for me to recall a message because that wasn't meant to be out in the ether there, that first one.
Yeah, you
um,
guys, as she said, all of these are going to be recorded. And something like this class, it is really good to go back and watch it multiple times because you can look at the current markets and follow along with the setups that
yeah,
are playing out in the live markets. So it is something that each time you watch it, you'll probably pick up something new.
awesome. You're right. And I love how you bring it through piece by piece. That's just, it should be such a help to everyone who's
Yes.
watching.
Yeah.
It may
And
also,
it's
go ahead.
easy to notice, hey, well, this is not following through with the template,
Right.
so am I going to take it or am I going to wait? And if you're wanting to really build your confidence to start with, well, don't take it if it doesn't follow the template, but still do a screen capture and watch it as it's following through, because that's how you're going to learn the different variations as well. You're going to learn, hey, when it doesn't work out, or it works but it doesn't follow the original template, you're going to start to learn a lot of additional rules for, hey, I can still take this. It doesn't look like the template, but here's a variation of the template.
Yeah.
And yeah, that's something that a lot of traders, they just don't put the time into. It's either it's this or it's not, and there's no room for, well, yeah, it looks like this, but it's not 100%. So does this additional trait mean that over time it's a pro or a con? And you have to have those screenshots to go back to study to determine, hey, is this really something that is going to work over time still? Or was it just a fluke that it happened this time?
Yeah. Awesome. Hey, are you seeing the chat, the questions box? Jesse was
Yes,
asking you a question. I'm not
is,
sure if I can say it right.
yeah, is the 61.8 fib for the last pivot low in the Phoenix and vice versa? We want the 76.4% zone for the last pivot. So your first pivot on a correction, let me just kind of draw that on the slide here. And actually, we've got it here. So on this is your 76.4. This is your 61.8. So what you want to see is on this first pullback, when you've got a two-wave correction, if that first pullback is hitting at 50% or 61.8%, that's good. And then your 76.4% has a really strong probability of holding. Now, again, there's more advanced rules to whether you want it to hold 50 or 61.8, but as a general idea, if you've got it hitting one of those two, then the 76.4 is where your zone is going to be for
Yeah.
looking at the entry point.
So, and then how does that change if you're trying to do timing for your fib?
Right. So if you're looking at your fib timing here, if you're looking at these distances between these highs here, if you're taking your fib timing from here to here, now NinjaTrader and things like TradeStation have different numbers that they use, but if you're looking at that 100% extension for time development, what we want to see is your last pivot low to be at 61.8% or further. So some of your programs are going to put that as 161.8. Others are going to show it as 61.8. But you're basically how much past this 100, this original move here. So here would be your 100%. Here would be your 50%. So you want your second pivot at 61.8% or later. And you, by the time it gets to that 138.2, it needs to be moving. So that also gives you a maximum zone. So your setup can happen anywhere following that 61.8% extension, but it has to be moving by 131 or 138.2. So if you're still struggling to get going there, I'm usually going to be phasing out of the position. Even though it hasn't stopped me out, I know that the odds of it failing are going to be higher. So that's another thing I didn't talk about in the class itself, but that's another thing to watch for.
Nice. Well, I really appreciate you being with us, Toni. And I'm sorry there was any trouble with the link to get started, but you were right in here right when I was checking to see So that's
Yeah,
good. That's
it's
always
one of
good.
those things where you go and you do a bunch of updates on your computer when you're not intending to do updates, and then nothing works as much as like it's supposed
Exactly.
to.
Exactly. That's kind of how the whole week has been. So I'm
Right.
glad we worked it out. And I appreciate you being here. I hope you will come back in the future.
I'd love to.
All right. Well, you have a wonderful weekend and thanks for being with us. I just can't say it enough. Thanks for being with us.
Oh, thank you guys. All right. Have a wonderful rest of your day, and I hope to see you all again soon.
Thank you. Bye bye now.
Bye.
All right. That was Toni Hansen of Trading from Main Street. She was telling us how to avoid traps. And that's something that we've been hearing all the last couple of days was, being a better trader means you don't do everything. You avoid things.